Well, it is the last week of February, and could flipping be making a comeback in 2026? Let's take a look. What does John Burns' research have to say about the flipping market in 2026? They are starting to see signs from flippers that the market is starting to turn around. So they do some great research nationally in both residential and commercial. I love following them. We'll get to these charts in a second. But overall, how much do flippers make up in the market? They make up about 6 to 9% of all transactions, which is a big percentage. And on top of that, with investor purchases, they make up about 25 to 35%. So they play a big role in the housing market. The challenges that they're still seeing in 2026 are going to be around high inventory. So when you are flipping a house, man, you want this thing to shine. You want to sell it quickly. Well, if you have to compete against a bunch of houses and they're lowering their prices and now you got to lower your price, and it takes longer to sell, well, that really compresses your margins because you are still spending money on hard money, for example, until you can close that sale. So they need that thing to sell quick. So supply, number one headwind, and high rates has been number two. All right, well, let's flip over to the charts. So this is the Kiavi index. So this is looking at how do flippers feel as we finish 2025, enter 2026. You can see for the last, probably over 2 years, flippers have just been really negative since rates went up. It's been harder and harder to flip homes. But now you're seeing kind of a nice little bounce at the end of the year. We got rates down at the end of last year. So that was a big part of that. And also the housing market index, what happened in the fourth quarter? Well, expected sales saw a nice rebound. And on top of that, current sales versus seasonal expectations also saw a nice rebound. So again, this is only a little bit of data, but we're starting to see flippers feel better about 2026. All right, I love this chart. Who buys a flipped house? Okay, 50% first-time homebuyers. Okay, this is entry level, affordable housing. You go into a neighborhood where the homes don't have a lot of luxury items. It's getting old. It's kind of beat up. You get in there, clean it up, make it nice for a first-time home buyer. That is 50% of the market. The other biggest segment is your move-up luxury segment. Think upper middle class, luxury homes. You're going into nice areas, good school districts. Take a home that's maybe, 20, 30 years outdated and really bringing it back to a current condition. So none of the other categories, in my opinion, matter. If you are going to flip a home, man, you go after that entry market if you haven't done it before. And if you have more experience, you can go after the move-in luxury market. All right. Well, this is, again, sentiment. If you're flipping a house, you thought you were going to make $500,000 and then it ends up selling at $480 or $460. It ended up below what you thought. So this is the response from flippers saying, hey, what percentage of these homes that all you people are flipping, are you seeing that your ARV ends up lower than what you thought? So you could see that was rising again from 2024 up until kind of middle of last year. And now they're seeing it again, 1 quarter of data. Don't overthink it, but they're starting to see it trend back down. Maybe finally starting to see it turn a corner there. And then finally, this one tells a lot. How many homes are you going to buy this year? Are you going to buy more, less, or the same amount if you're a flipper? Well, you're seeing since 2023 more and more homes. So now 71% of those that do this actively are saying, yeah, I plan on buying more homes this year. So that's a good sign that maybe the flippers will be coming back into the market and we'll see more updated homes hitting the market soon. All right, we're going to swap this over. This is the Austin Metro. Let me move myself over here. So again, now that we're getting into the spring, we're seeing that inventory climb. We're seeing, months of inventory climb up again. We have over 14,000 single-family homes currently for sale in the Metro. As of January, 1,645 sold. So, it's a little bit of buyer activity, but really we're seeing a lot of stuff there. Supply and demand, we've seen this before. So basically the supply, you can see where we are. Seasonally, we're going to be on the upswing each month with inventory. This 10-year average is this dotted line. Okay, we're way above that. All right, so typically last year we had about 10,620 homes in January. Now we have 14,000. So we are still seeing supply climb. What we're going to be following is demand, and you can see we're below the dotted line on that 10-year average. And so anyways, they just redid this website. I like those changes. makes it easy for you to see. Let's look at a couple things in ABOR. So this is our MLS. This is the historic sales price trend. It's kind of going sideways, folks. I mean, we have seen the price come down a little bit. There are pockets where we are seeing the price maybe softer than others. But if we look at the last 12 months, if I go all the way back to the beginning in April, median home price was $446. If I come to right now, we're at $430. So sure, down a little bit, but we'll see when we get to April where we're sitting. I think we're kind of starting to flatten out. So we're going to be watching that. The only thing that's going to crush that is if supply just keeps growing unfettered without any new buyer demand. I do think we have some more buyer demand this year. And if rates bounce back up to maybe over 6.5%, closer to 7%, that will slow the market down. Here is where we sit on active versus sold listings, and you can see the bell curve. We're kind of just trying to turn the corner here. This is single family homes. As we sit in late February, we're about 11,000 homes on the market. If we look at January, we were at 11,000. So that's okay. You know, it's not jumping. It's starting to round. So I expect we're going to see some increase in inventory as we go over the next couple months. The real question is buyer demand. Don't go off sales yet. They haven't recorded all these sales. It's going to take another 3 or 4 weeks for the February sales to fully fill into the MLS. And so I expect by the time we get to late March, we'll be able to see February. My guess is February sales will be higher than January. Finally, interest rates are really good right now. They are at the lowest point we've had since late 2022. That's 4 years. So we are at a good place for interest rates. No, we're not going to have 3% rates anytime soon. But for current rates, this is the best rate we've had in 4 years. That is getting some people off the sidelines. We are starting to hear word of buyers in, some properties and multiple offers. We're seeing some stale inventory start to get offers now, stuff that sat around through the winter and didn't sell. Now we're seeing some of those properties get offers. I expect unless inventory outpaces buyers, I expect days on market. Maybe we peaked last year, but we're going to have to watch that, see how that plays out. Anyways, if you want to watch these videos each and every week, make sure to go to our YouTube channel at Ryan Kelly Group, click that subscribe button, and would love to have you follow us there. And of course, if you know anybody looking to buy, sell, invest, or finance in Austin, would love the opportunity to chat with them. Anyways, we're going to have a pretty nice week here in Austin as we wrap up February. It is my wife and I's 20th anniversary. Can you believe that? So we're going to try to go on a little lunch date. Enjoy that as well. Anyways, hope you guys have a great week and talk to you next Monday. Thanks.